Be Wealthy and Smart, episode 645.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about last-minute tax strategies to save on your 2019 taxes, because the end of the year is coming up fast and we're getting into holiday season. And I know that you need to get on this before the end of the year. So if you want to save some money, reduce some taxes, put some strategies to work, that's what we're going to talk about today. And I'm sharing with you an article from CNBC.com called Hoping to Save on Your 2019 Taxes, Time is Running Out. And it was written by Darla Mercado. And it says, there's still time to shave a few bucks off your 2019 tax bill if you act quickly. The 2018 tax season came with a harsh lesson for some taxpayers who didn't properly adjust their plans for the Tax Cuts and Jobs Act. This overhaul of the tax code roughly doubled the standard deduction, $12,200 for single filers and $24,400 for married couples filing jointly in 2019, eliminated personal exemptions, and limited certain itemized deductions. And it does have a link here to show you all of those itemized deductions that have been limited, so you can take a look and click on that. It goes on to say, whether you're still smarting from this past tax bill, or you're looking for a clever way to ramp up your savings in the remaining weeks of the year, you still have time to get it right. Here's where to start. First, do a withholding review. Failure to withhold sufficient tax could leave you with a smaller than expected refund in the spring, or you could wind up owing. Consider reviewing your 2018 return and crunching the numbers to update your withholding for the future. Here's where things get tricky. To avoid an underpayment penalty, you're required to pay at least 90% of the current year's tax liability, or 100% of what you owed last year. That percentage goes up to 110% of last year's tax liability if your adjusted gross income was over $150,000 last year. If you've been withholding all year and you still wind up short, writing a check to the IRS for estimated taxes now won't be enough to avoid the penalty. You're supposed to pay the taxes throughout the year, said Jeffrey Levine, CPA, and Director of Financial Planning at Blueprint Wealth Alliance in Garden City, New York. Talk to your employer and change your withholding for year end. This might mean withholding a hefty chunk for December, which reduces your take-home pay. Well, that doesn't sound like fun, but it is something that you do have to check out so that you don't have additional penalties to pay next year. So if you haven't done a withholding audit, you probably do want to do that. This article links to the IRS form that shows you how to get your withholding right. So if you're not sure how to do that, it walks you through step by step on how to withhold enough. And if you had life changes such as a marriage, childbirth, adoption, or buying a home, or your income changed a lot, it recommends that you definitely take a look at this. And also, if you owed additional tax when you filed your return last year, if you had a refund that was larger or smaller than expected, or if you adjusted your withholding in 2018, especially in the middle or later part of the year. Those are all things that would trigger you to need to get your withholding right so that you can avoid penalties. And if you do need to change your withholding, there's also a Form W-4 Employees Withholding Allowance Certificate that is right here that the IRS offers on their website that you can complete. All right, the next thing you can do to reduce your income and potentially your taxes is to harvest your tax losses. The article says, owning a few losers in your brokerage account can work in your favor this year. Tax loss harvesting is a strategy in which investors incur losses in a taxable account by selling investments that have declined in value. These realized losses can offset capital gains from appreciated assets. If your capital losses exceed your capital gains, you can apply up to $3,000 a year in losses to offset ordinary income. Meanwhile, if you're in a low tax bracket this year, consider selling some of your winners and reaping the capital gains in your taxable account. For those who are in the 12% ordinary income tax bracket, they can recognize capital gains and pay zero taxes, said Brooke Salvini, CPA and member of the American Institute of CPAs Personal Financial Planning Executive Committee. The next strategy is to ramp up your retirement savings. You have until April 15th of 2020 to stash money into your individual retirement account or health savings account for the 2019 tax year. However, you have only until December 31st, 2019 to put away cash in your 401k for this year. In 2019, you can save up to $19,000 in your workplace retirement plan, plus a catch-up contribution of $6,000 if you're 50 and over. You get two benefits here. Contributions to your 401k reduce your overall taxable income for 2019, and you're shoring up your finances for when you finally stop working. The next strategy is to increase your charitable giving. With the standard deductions so high after the tax overhaul, bunching charitable giving, or bundling at least 2 years' worth of donations into 1 year, is making sense for people who want to itemize on their 2019 return. Instead of $10,000 a year in charitable giving, you might do zero in 1 year and $20,000 in the next, said David Lane, a partner at Withers in Greenwich, Connecticut. This way, you really get something for your charitable contributions 1 year, then take the standard deduction the following year, he said. Boost your tax efficiency by making a gift of highly appreciated stock, rather than selling the asset and donating the cash, said Salvini. That's because you're paying capital gains taxes when you sell the stock, which diminishes the value of the gift, and the amount you can write off on your tax return. If you gave away the stock instead, you avoid the capital gains tax, and you can deduct the fair market value of the donation. Get a letter of acknowledgement from the charity and keep it with the rest of your tax documents, as you'll need it next April. If you're over age 70 and a half and taking required minimum distributions from your IRA and you don't need the money, consider taking a qualified charitable distribution. In this case, your custodian transfers the required minimum distribution directly to a charitable organization, and the distribution won't be taxable to you. Be aware that there is no double dipping allowed. It doesn't count as a charitable deduction for you, but you also don't have taxable income from the qualified charitable distribution, said Lane. End of article. All right, well, there was a lot in there, and of course, I'm going to put a link in the show notes so you can take a look at this and click through the links right to the IRS website so you can get all the details and forms that you might need. But just beware, if you had a lot of adjustments to your taxes last year, you might need to do this withholding review and make sure that you're withholding enough tax so you won't be charged a penalty on top of your regular taxes due. Put this on your calendar to get after it before the end of the year so you can make these adjustments and avoid any negative consequences for yourself. I also did an earlier podcast about the new tax rates for next year, so you can plan for what tax bracket you're going to be in and use some of these strategies to maybe reduce your income this year so you don't get into a higher tax bracket next year. So if you're close to being between brackets, you do want to see if you could take advantage of some of these deduction strategies that I've just mentioned so that you can keep yourself in a lower tax bracket and possibly save yourself thousands of dollars of tax. These are all legal strategies that are so important for you to pay attention to because they literally can put thousands of dollars in your pocket. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss tips for your financial freedom. And if you're ready to get your money working harder for you and you're interested in joining the Be Wealthy and Smart VIP experience, my inner investing circle, fill out the short questionnaire in my show notes and we'll set up a time to talk. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.